FOMC just announced a 25 basis point interest rate cut. I always get asked, doesn't the stock market usually go up when interest rates drop? The answer is, it can depend. It depends why the Fed is cutting. Are they cutting to avoid a major slowdown, or are they cutting simply because they can? History shows that when the S&P 500 is within 1% of all-time highs, like it is right now, and the Fed starts cutting rates, on average a year later the S&P is about 15% higher. The Fed announced that they believe the weakening labor market right now warrants a rate cut regardless to the impact on inflation. When the Fed cuts rates, there is a balance between inflation and employment. Lower rates typically mean better employment but can boost the chances of higher inflation, and the reverse is also true. Personally, I'm not too concerned about the labor market, and I think the rate cut was a good move by the Fed. Jerome Powell would need to provide some kind of reason to justify his rate cut, especially given the tensions with the president. They also signaled that more rate cuts are likely to follow. So I'm still bullish on the market. We have a ton of spending in AI, oil prices staying low, and rates coming down from a pretty high level where we're not at zero, so there's still a lot more room to cut and drop those lower. There's a saying on Wall Street that rates go up like an escalator, but they come down like an elevator. So what sectors usually benefit after rate cuts? Large cap tech often rips higher. Financials can see more lending activity. Healthcare stays steady but also benefits from cheap capital. Consumer discretionary perks up as people spend more. And housing gets a big tailwind as mortgage rates come down. Hit like and follow for daily real-world financial content like this in your feed, and go join the trading Discord. The link is in my bio. It's free to join. Just DM me if it doesn't work. This is not financial advice. Always do your own research before investing.